Hi, and welcome back to New Zealand Property Insights. I'm Paul Roberts.
And I'm Debbie Roberts. We're the owners of Property Apprentice, and we're here to help you navigate the New Zealand property market with facts and our opinions. Today, we're diving into the new Cotality Decoding 2026 report. The headline says 71% of Kiwis expect house prices to rise, but we're going to look at why cautious optimism is the real story.
And then we're going to be looking at, are you chasing cashbacks? We look at the record-breaking $5.8 billion in bank switching last month. Is moving banks for a cash payer actually saving you money, or is it costing you more in the long run? So first of all, the 2026 market outlook. We've just had the release of the Cotality Decoding 2026 report, and it paints a very interesting picture of where our heads are as a nation.
The headline number is that 71% of respondents expect house prices to rise in 2026. And that sounds bullish, but when you dig into the details, the mood is actually one of cautious optimism rather than a boom. We're entering a period of measured growth. So while we look at 71% of the people surveyed who expect house prices to rise, only 14% anticipate growth of more than 5%. The majority are predicting modest gains. There's a massive split across the country. Canterbury is the most confident region, with 87% expecting house prices to rise, whereas Wellington continues to struggle, with most respondents expecting it to underperform the national average due to public sector job uncertainty.
Interest rate reality following the Reserve Bank's cut of the official cash rate to 2.25% in November 2025. Sentiment has actually shifted. Fewer people now expect further cuts. The shift from the cut in November, 54% expected the rates to drop further in 2026. That number has now fallen to 43%. The wholesale market is anticipating increases in interest rates towards the end of 2026 and or early 2027. The thing I love about the report is it debunks the myth of the New Zealand property market. There is no single market. You've got Canterbury firing all cylinders, 87% confidence, and then you've got Wellington where confidence is significantly lower than that.
Exactly. If you're an investor looking at the headlines saying prices rising, you might buy in the wrong area. You need to look at local economics. The report explicitly says that Wellington is lagging because of the jobs market. There's also an awful lot of vacant rental properties in Wellington and an increase in homelessness. I mean, seems to be an obvious solution somewhere in the mix there. But Canterbury, for example, is outperforming many areas at the moment because it's affordable and has better rental returns. And there are plenty of other examples just like that across the country.
So let's look at the interest rates. The OCR has been at 2.25 since November, which is great compared to where we were a few years ago. But the report suggests people are realizing that the next move from the Reserve Bank is more likely to be an increase than a decrease. The question is when that will be.
The key takeaway here, it's currently a stable, flat to rising market, which is actually a really good time to buy if you know how to negotiate and if you're buying the right property for your financial position. I mean, anyone with a deposit and who can get enough lending from a bank can buy a house. That's the easy part. The hard part is keeping that sucker for 10 years if you've bought something that you shouldn't have bought, or if you've been sold the dream that turned out to be a nightmare. As a financial advisor that doesn't sell properties, I've been shocked at how many people have had bad advice about buying an investment property. So many companies offer their financial plans for free, but they're designed purely to sell you a property that they get a commission for. So let me ask you this. Does that sound like free financial advice to you? Have they got your best interests at heart? Or are you paying top dollar for an underperforming investment and just hoping for the best because the salesperson's projections looked good? Think of it like free often actually just stands for forever requiring endless expenses.
Absolutely. So in the current market, you can literally make money when you buy. You can make money with a pen and create your own capital growth by adding value to the property or renovating it. A lot of people say, oh, I haven't got time to do that. It doesn't matter. You might be taking it on as tenanted, And you've got that backup to do that at some point, whether it's renovating or adding a minor dwelling. So, yet ironically, according to a recent survey, the majority of buyers in the current market are looking for properties that are either new or newly renovated. This is massive opportunity. If you want to get the results that most people get, copy them. If you want to get the results that most people don't, you have to do something different. You've got to go against the grain. Just remember that most people don't retire wealthy. In fact, the majority of New Zealanders retire barely above the poverty line.
Exactly. So don't do what most people do, is the moral of that story.
Yeah.
All right. So next segment, let's have a look at the great bank switch and who really pays.
Finally, we're looking at the apparent trend in the mortgage market right now. That is the great bank switch.
Yeah, Reserve Bank data for December 2025 showed a record-breaking $14.1 billion in new lending. But here's the kicker. A huge chunk of that, $5.8 billion, was just from people switching banks, like taking their mortgage from one bank to another bank. And that's more than double the previous refinancing record. The surge was caused by switching, which accounted for 41% of all lending activity in December, up from a previous high of 30%. The driver was all about those cashback deals. Banks were aggressively offering up to 1.5% cashbacks in November, and many borrowers took the bait. Who's moving? Calvin Davidson from Cotality notes that borrowers with large loans and large incomes are the main players here, because obviously if you don't have the provable income to switch banks at the moment, then you're not going to be able to do that. So people with large loans and large incomes have got the leverage to get the best deals out there.
So the pass the parcel game, David Cunningham from Squirrel warned that this is a zero-sum game. New customers get the cash, but existing loyal customers often foot the bill through higher interest rates than necessary. The interest rate trade-off, Cunningham also said that if banks weren't spending millions in cashbacks, we might see a one-year fixed rates down at 4% already. Instead, looks like cashbacks looks like it will be the game, that new battleground that we have. So this confirms exactly what we tell our clients here at Property Apprentice. The bank is not your friend. Even if you've been a loyal customer for 20 years, we don't care what color the bank is, whether it's red, blue, green, yellow, doesn't really matter. Just show me the money, give me a good rate, give me a cashback.
Absolutely. But you do have to be careful because switching isn't always free. You might have break fees on your fixed rates or clawback periods if you took a cashback deal less than 3 years ago. You can't just switch banks every 6 months and keep expecting cashback deals forever. I mean, that'd be great. You'd pay off your mortgage pretty quickly, but the banks are never going to give away money completely for free. Also, not all banks are created equal. Depending on your income source, financial position, and personal requirements, some banks will be better for you than others.
So the key takeaway is negotiation. You don't always have to switch banks to get a better deal. Often threatening to leave or having a good mortgage broker on your side that can present to a competitor's offer to your bank might be enough for them to match the rate or offer cash repayment.
Absolutely. Banks are still competing for business, and they can be negotiable on interest rates for existing customers, but usually only if you ask. So don't sit on your hands. If your fixed rate is coming up, ask your bank the question, what's the best that you can do for me? Or better yet, get a mortgage advisor who's got better access to a wide range of different banks to see who'll give you the best overall deal. The best part of working with a mortgage advisor is that it costs you nothing. They get paid by the lender when you get lending, but it has got a huge benefit of allowing you to leverage your time and also gives you the advantage of working with a lending specialist who works in your best interest because they work for you, not for the bank.
So that wraps up this week's New Zealand Property Insights, and it's a good time to be buying if you know what you're doing and you know your numbers and you know what to look for.
It's a property market with a lot of moving parts, but just remember, problems often create opportunities for people who are more informed. If you're listening to this and thinking, I need to get my own strategy sorted, we'd love to help.
Yeah, absolutely. And Debbie runs weekly events called How to Succeed with Property Investing, where we go much deeper into what's happening in the property market, how to best structure mortgages, handle interest rates, purchase investment properties, and how to reduce the risk when investing in property. So please come along.
Yeah, these online events are completely free, and it might just be the most valuable couple of hours you spend this week. They're live and online, so you can ask me as many questions as you like, and I'll answer as many as I can in the time frame that we've got. You can find the link to the show notes or go to propertyapprentice.co.nz.
Thanks.
See you next time. Hey there, want to stay on top of the latest property news and trends? Subscribe to the Property Apprentice podcast for weekly updates that will help you to navigate the market like a pro. We cover everything from insider tips to expert interviews, so you'll always be in the know. And don't forget to ring the bell and hit that subscribe button here on our YouTube channel for even more helpful content to boost your property journey. Check out the link in the description to subscribe to the podcast, and we'll see you in the next episode. Happy investing.